Good afternoon, everybody. Thanks very much for joining us here at Transport Logistics. 2 years ago, we were running a session looking at the future of logistics real estate. So we'll see how that's moved ahead, what the views are today. We've got a super panel here for you. And I'll also be very interested to get your views, your take on things. So if you do have questions, stand up, put your hand up, whatever is necessary to get my attention, and I'll make sure we get a microphone to you so that also you can share your questions with us and we can try to answer those as efficiently as we can. For those who don't know me, my name's Richard Betts. I'm a co-founder and the head of content at Real Asset Media. And we focus on the real estate side, but covering everything from the investment all the way down through the investment managers, into cities, regions, locations, foreign direct investment, and the trends driving those in terms of supply chain as well. So we're looking across all of those things, and fascinated to be here where there's 75,000 people and 12 halls, because we're often here for Expo Real in this room with the International Investors Lounge, about 20 feet over there, and this is significantly larger, so delighted that you can be here. We're just going to quickly do some introductions. Let's start with you, Pascal, if we can. So a brief introduction of yourself and the company, and then we'll move our way down. Pascal.
So many thanks. My name is Pascal Laucht. I'm working in the investment team for Swiss Life Asset Managers Logistics, one of the largest real estate investors and asset managers in Europe. And we are focusing on developing logistic assets.
Super, thanks. Kilian.
My name is Kilian Mahler. I'm working at Periskop Partners. We invest money of institutional investors into real estate. I'm responsible for the asset class, logistics and light industrial.
Great, Max.
My name is Maximilian von Medem. I work with Union Investment, the real estate part of DZ Bank Group. And I occupy myself with our investments and disinvestments in logistics in the DACH region.
Super. Ed.
My name is Edward Plumley. I'm the co-head of logistics at Colliers. Colliers, for those who don't know, is one of the leading global real estate service firms. 5 billion revenue. We're in 70 countries, 23,000 people, 100 billion of assets under management. So a diverse global player.
Great. And last but not least, Raimund.
Thanks a lot. Hello. By the way, can you hear us? Because I hear an echo, so that's okay, it's good. So my name is Raimund Paetzmann. I've done some history behind me with Amazon and Zalando. Started in 1999 with Amazon, doing the first certified fulfillment center in Europe. Later then for Zalando, I had a little intergame with Union Investment for 2.5 years. So I've also seen the other side of the investment side. And since a year, together with my partner, Karl Friedrich zu Knipphausen, we have a boutique consultancy helping people to have a strategic advantage on the real estate market.
And just in terms of the session here, we're going to have a brief introductory presentation from Raimund, picking up on some of the key trends, how they're influencing both, I suppose, supply chains, real estate, but the occupier perspective as well. And then that will act as a sort of springboard for the conversation. So because we're here, we're going to applaud ourselves, welcome our speakers, and also Raimund. So welcome, everybody.
Thank you. So I put something together because we are also here at a logistic conference. Maybe most of you don't need this kind of information. Usually if you go to real estate conferences, then there are sometimes participants which are not so familiar with supply chain topics or some other things. So I'm trying to shed some light on this. So my challenging question at the beginning, the times we're in, what happens when TikTok, DHL and Rheinmetall or Microsoft want the same plot of land? Because that's what I think is going to happen in the future. So this presentation is a little bit about the new strategic importance of logistics. So this is actually a building, and most people here in this hall will know what kind of building it is, maybe identify it as an e-commerce fulfillment center. And immediately it starts to think about, what could I use it for? What kind of asset is it? So quite simple, but the problem is then when you talk to the real estate world, suddenly they see something completely different. So they think about, what is actually in the market. It's a little bit the weather, what they see. They talk about break-even ratio, price-to-rent ratio. They talk about interest rates and everything. So that's sometimes why it is so difficult in the logistics world to come together with some real estate people, because they're just talking about two different things, and you have to keep this in mind. What you actually want to talk about. So then the new strategic importance of logistics. Logistics is now geopolitical, digital, and strategic. I think that's very important. So the geopolitical fragmentation and the deglobalization definitely has an impact on the supply chain. If you go to supply chain conferences, the supply chain managers, they're really having a headache thinking about how can they solve everything. If Trump is making a new decision about tariffs, how should they organize the supply chain? So we are in the middle of some restructuring of the supply chain, going from geopolitical or global work streams, also in regional clusters, to be more independent. So then, of course, digital and ESG transformation plays a big role. The last 2 days, I heard already on the trade fair that some people ask me, is ESG really still important? So the US is not doing it anymore. It's very interesting. You have some logistic companies, customers. They're looking more in the cross-docking, freight forwarding. They are very cost sensitive, and they may be not taking so much care if they don't need to do it, because cost is everything. But on the other side, if you have e-commerce companies, they are really looking into it because they know their customers take care of ESG, and they want to make an environment where customers buy, and that's also the people with the highest buying power. At the same time, we see also something completely new, or not completely new, but picking up more and more, is the race for land for data center. Then we have defense, and we have e-commerce. That's why I asked the introduction question. So the global shocks are reshaping the supply chains. So there's from just in time, it goes to just in case. What does it mean? Just in case means you have to prepare for everything. So you need more storage and be prepared for any case what could happen. You see more nearshoring in the future. Nearshoring, it's not reshoring. A lot of people think suddenly what Trump is also trying to have manufacturing back and put everything back into the market. It's more to be, have at least the forward supply closer to the markets. So that's a nearshoring that happens most of the time in Eastern Europe, but Portugal also plays a more important role in the future. And of course, it also leads to higher inventories, leading to more resilience. So that's very important. And what I said before, regionalizing the networks is a key trend. So the implication is industrial logistics, real estate is no longer just about throughput. It's about stability, optionality, and national security. That's also something what was not in everyone's mind before. So what are the users' most professional top concerns? So you have labor shortage, it's still a big concern in Europe. You have land scarcity, what I said before, there's competition for every piece of land, and there's cost volatility. So it's changing all the time. There is the pandemic, then there is a war, suddenly the material becomes more expensive. So very often, even if we consult, we have mandates. 1 month you say them, okay, that's probably the cost for the logistics center, and maybe 6 weeks later it could be completely different, so you always have to double check. So then you have the visibility gaps, so that's even with all the digitalization, how the supply chain is going on, there's still a shortage of knowing exactly where the products are, so for every piece of the supply chain. So that's something where they're working on to get more visibility. And then, of course, there's compliance and custom pressure. And custom pressure is mainly also now with all the new tariffs. Then we go to the next one, data centers. Why you talk about data center? Because it's in competition with logistics and defense, and this is creating a land grab in the moment. So the demand for logistics compatible land is exploding. So data centers, very power hungry and land intensive because they also need a lot of land. Driven by AI, Europe's data center hyperscaler market is expected to triple by 2030. And the question is actually, can we accommodate? So I'm asking this provocative question. So we have not enough power. So we also logistic needs more and more power. We have not enough land. And the hyperscaler, most of the time, some big data center which are directly going to the US, and we do not have anything in return. So that's definitely something what we should think about. And of course, last but not least, the defense industry. And EU and national governments have allocated almost $1 trillion to quickly close the gaps in defense capabilities. So there's a huge market. Implications for all players: higher land prices due to competition, more strategic co-location with infrastructure as rail and power. It's very important. And since I see Thomas Steinmüller, we had some discussion and he also commented on my post. We actually think there's a window of opportunity in the moment. If you go around here, a lot of 3PL companies complaining a little bit that everything is very slow. Some others thinking about expanding but are not taking the next step. I think for probably the next 18 months is your opportunity. If you think about building something, I would do it now, because I'm 100% convinced if nothing goes further south, some more bigger crises, I think in 1.5 years we will have a boom again, and everyone is fighting for the resources of land and tries to build something. And to see this, I made one comparison looking in the GDP. And of course, everyone knows what is the GDP of the countries. That's the first part. And I've put the population, the density. But what I found very interesting, when you put the GDP per square kilometer, then you see really how much you can make out of Germany. And that means also that there is already, maybe over maximized. So there's not much more room if you look into this. Japan is the next one. But Japan is even a little bit special, because if you really deduct the big countries like Tokyo, the big cities like Tokyo or the urban areas, most of the people live there on the countryside. They have even sometimes more land than we have in Germany. But you see, France has still a lot of capacity. In the USA and even China, you see there is room. And it's not a very scientific approach. But I just thought I want to see some benchmark. How can we actually compare what is happening? Then this panel is also about where the action will be in new regions. If you go to supply chain conferences, there's a lot of talk. Poland definitely is a strong nearshoring and military logistic growth and potential rebuilding for Ukraine. That's also something we all hope that the war is over at a certain time. And there's also another allocation of 500 trillion then in US terms to rebuild the Ukraine over the next 10 years. Also, this needs to be organized. You need all the supply chain to get to the Ukraine. So that means you need the infrastructure in Poland. Hungary could play a role as defense and R&D supplier cluster, but this has, of course, a high dependency, as everything in the moment, on the political development. Where are they going? So in the moment, they're not following in the EU on some initiatives about the Ukraine. So you have to be sure that they're also on the side of the EU. Then Czech Republic will be definitely a central location with automation and dual-use focus for defense. So there will be a lot of demand also for vehicles, what is not really tanks or bigger ones, but the normal transportation trucks. It's already a big market in the Czech Republic, will be also in the future. Portugal, low-cost base nearshoring. Germany, France, and Netherlands, no question, will remain irreplaceable for pan-European nodes, especially ports. And then, of course, we will also have, we will also see some in the Baltics, in the Romania will be also driven by subsidies, infrastructure, and upgrades, proximity to eastern border. So there will be definitely a market. And it's also important when you have discussions. I also heard today, coming with a customer looking for land, then you hear that the mayors or the cities are not very welcoming. They always say logistics is not really something value adds. Completely wrong. If you see that logistics is a 14% GDP backbone in Europe. So directly contribution is really 6% of the GDP. Indirectly in-house logistics, so verticals, if you put this together, then you have 14%. One of certain jobs in EU is logistic related, so very important industry. Yeah, and logistics stands for 12 to 15% industrial production value. The conclusion, logistics is not peripheral activity, it's a central driver for European competitiveness. And that's, I know everyone is trying to convey this message to the mayors, but we have to do this more, how important it is. Then we come to the e-commerce evolution. So there's a lot of talk about TikTok, Shimo, or Timo, all the things. So the traditional e-commerce is maturing, but a new wave is coming. And actually for the first time, so I have this long time, 17 years with Amazon, but there's definitely a new generation coming in the new way of shopping, the social commerce that you buy on TikTok, or even what Timo and Shein. So it's more the gamification factor. And it's much easier to find stuff, or prompt shopping. So they will have the first challenge, to how to compete to the new companies. And Temu and the Chinese mega discounters, they are opening warehouses because we have this point that everyone is expecting that this de minimis factor, the special custom agreement, what they have done already in the US, is they will get rid of it, that they have to pay only a small amount. So they are preparing for it, because they will not be able in the future to send everything via air freight. So that's why you see also here, had already some discussions that they're looking for warehouses to prepare for the future. So the impact of logistics will be more fragmented demand, customer to manufacturer. This is also a very important part, because Temu is not only a platform that they have everything in the warehouse, they have also introduced a system, because also due to the lead times, that you can order something and it goes directly to the fabric, and the fabric or the manufacturer is producing it and then sending it to Europe. So that's also a trend, can also happen in Europe. There's actually every small company or manufacturer could open the manufacturing capacity towards e-commerce and have this direct to consumer. So so it will be more localized and more viral SKUs. So the trend in the past that you go more and more, bigger and bigger, more inventory, that you have the highest selection in the world, will maybe also change to some lower SKU numbers and fast movers. So the summary, strategic thesis on the future. So I think logistics equals resilience and sovereignty, not just speed. Competition with data and defense. Eastern Europe will be strategic. Top assets is modular, ESG, and grid connected. And I think that's a very important part. This is the decade for logistics to sit at the heart of Europeans' industrial and political agenda. And the right real estate footprint is the critical enabler. And where land is scarce, every hectare is strategic and must be prioritized. So I think it's a very important part. And that's, I think, to frame the discussion a little bit, looking forward to have your questions or the panel's questions and discuss with Richard. Thanks a lot.
Great. Thank you. Really interesting perspectives on the panel. Thanks for that introduction. Lots of things to drill down from that. And if you've got questions, put your hands up. I will come back to you at various points, but please do, because we're very interested to hear what you would like to know about as well. Let's maybe pick up with you first, Ed. Just some reflections on that, maybe. And I suppose if you're looking at the key trends when we're looking at supply chains, logistics, how do you see that? So any reflections on that, and also your view on some of the key trends right at the moment?
Sure. I think Raimund's picked up some interesting topics there. We look at things in perhaps 4 Rs or 5 Rs. Rewire. Europe needs to up its game in rewiring. Rearm, which obviously we discussed, defense. We've talked about reshoring, which has obviously been there for a while, and that's just accelerated. We've talked about re-R&D, which I think is a big thing for Europe. And then I'd also argue re-com as well, e-commerce, because there's been a tail-off since COVID, but now we're seeing an uptick in e-commerce sales, which is one of the fundamental drivers for logistics in terms of demand. And we're now, UK and Netherlands leading out there, but actually we're seeing the other countries also upticking, which is powerful. So I think the interesting thing is that these are trends that have been there before, but I think these are trends that are going to accelerate. And now I think it's had the wake-up call that Europe needs to start being more self-resilient.
And do you think these are trends that have changed dramatically, let's say, over the 2 years since transport and logistics was here, but specifically even over the last year, Ed?
I think these trends have always been there in some shape or form. If you go back to COVID, it was all about actually resilient supply chains were needed. Retailers, businesses couldn't service their customers sufficiently or accurately. You had weeks and weeks of delays in products being delivered. I would say and we had obviously fortunately the desperate situation in Ukraine and what that's meant, and we've had sort of energy crisis we've had several crises along the way that I think it's just accelerated this change. I think we've had this change in the last year, you suggest, is actually it's almost kicking into action, I'd say. And that's the thing that I think has been the big difference from last year to this year and to previous couple of years ago. It was talked about, but now you see Germany, for example, putting 500 billion investment for defence and energy, and that's a huge amount of opportunity for Europe to then develop that. So that's an example of an action that's resulted from things.
Great. We're going to drill down into what this means in terms of locations of the future, so picking up one of the key points here. But in terms of the investment side, interested to get the investor perspectives, and let's start with you, Max, in terms of how you're seeing those trends and how they're influencing, I suppose, your decisions on investment locations, the types of real estate.
Yeah. Thank you. I'd like to add one trend we see which has huge significance, which is and Raimund touched up on that, the labor market, which has growing impact on the choosing where we choose the plots we find interesting to invest in, since automation is working in a way that labor market can be replaced by automation. On the other hand, we have a very diverse tenant base, and local small 3PLs do all the labor pretty manually still, and there's not much automation happening there. So one key ingredient for us to find a good location is actually to look at supply of workers in the vicinity of those. So maybe a great location in the Munich area would be viewed as a very, very strong location, but labor availability is really low, so you'd rather move out a bit of the city to have a higher availability there.
Okay, good. And Kilian, if there's any trends you particularly want to pick up, do, because there were some interesting things I thought there as well about the focus on ports, for example. What's your take on that?
Yeah, so I think energy supply is a topic getting more important, not only for data center, also for logistics and warehouse buildings. Energy supply is key, and also the energy pricing. So it depends on the peaks that the tenants have in the buildings, determining which location is interesting from an energy supply side. On the other hand, I think still infrastructure is key. So having close by ports, motorways, airports. So I think that still established locations like Hamburg, Düsseldorf, Cologne area, close to the Netherlands ports, the Frankfurt, Rhine-Main area, Stuttgart, Munich, these are still very attractive locations. Furthermore, I think also central locations in the middle of Germany, Kassel, Bad Hersfeld for national distribution are getting more important. Or also when we talk about defense, we will probably have warehouses for defense in the middle of Germany and not at the borders. So furthermore, when we look at harbors, we can look at the Jade port, which is perhaps a future location. In the past, the Jade port wasn't so important, but it's the only deep-sea water port we have in Germany, and we see that they are picking up more business. So I think that could be a future location also.
Okay, good. Interesting, I think, that in terms of locations about the defence side, and that's more likely to be in the central area, I think. And maybe, Pascal, picking up with you, and feel free to add any trends from your perspective, but in the areas, the markets where you're working, what's driving your decisions about locations? And I suppose, what are the occupiers looking for there?
Yeah. So basically, for us, the competition on every side is really important. So we really look at each market really individually and try to see how much space is already available, how the vacancy rates are, and the entire economics regarding the specific locations, in order to make the decision whether we want to go there and start developing assets there, or also invest in these markets. And also, I couldn't agree more, especially the locations right next to the Netherlands, including North Rhine-Westphalia, really attractive, as well as going down the road to Rhine-Main, as well as Stuttgart, and also the Munich area.
Okay, good. And Ed, just coming to you, I mean, that's very interesting, picking up on some of those points, especially some of those in Germany as well. You're seeing, Ed, across the whole region. So maybe pick up a little bit, because it may be useful for people to know, what's happening in the UK versus France versus Germany versus the Netherlands. And there's a lot of activity at the moment, for example, in Iberia. And you mentioned as well, Raimund, CE. So.
Yeah, I think it's interesting. There's a common trend and theme here. I think the interesting point to pick up on ports, I think that's going to be a really important piece across Europe. For example, we're going to see some growth in Marseille. I think that's going to be important coming up from the Mediterranean. I think Gdansk in Poland is going to have a more increasing influence, particularly if Poland Sea is going to be what we call become the breadbasket of Europe for defence and for cost-effective distribution channels coming from that part of the world. UK, we're going to see an uptick in Thames Gateway, London Gateway into London. That's a huge conurbation of significant growth, and I think all the logistics, the development and investment in and around those infrastructure nodes, be it airports, ports, will become more and more important, particularly come focus when we realise how dependent we are. You talked about Iberia, and for example, there was that power cut, obviously in Portugal and Spain. And I had colleagues in Spain going, oh my word, I can't get to my hotel room. I can't actually get into here. I don't know. And the only reason he get into his hotel room was because the manager of the hotel knew who he was to stay before. But you can imagine what's that disruption actually doing to people's lives. So I think this is a real interesting example. Okay, it's not necessarily related to an attack or some sort of problem, but it's a critical infrastructure failure. And I think that's going to be something that's going to be more and more important and resilient. So for me, actually, one of the areas of logistics I think is fascinating and undervalued, which I'm sure we'll talk about later on, is open IOS, industrial open storage, and infrastructure logistics will become, I think, a new area of growth.
Okay, well, that's interesting. Why don't we pick up on some of the new areas of growth? We've mentioned technology, other areas. I suppose when we're looking at what are going to be some of those key new areas that will be driving growth, anyone can take a view on that in terms of drivers of growth. Where are you expecting that to be, whether that's going to be in e-commerce, whether it's retail, whether it's in new different markets? Anyone want to have a go?
Maybe as the occupier representative. So I think that I mentioned already the key trends, but maybe there's some others. It's like pharma, so that's definitely playing a role. Today there was actually an interesting article in the Handelsblatt that most of the deficit comes actually from Ireland, because they're sending all the pharmaceuticals to the US. So the trade deficit between US and Europe is mainly driven by Ireland. And this tells you that there's maybe something wrong. And I think I do not expect there will be now the genie out of the bottle, and there will be something completely new. There will be drivers in e-commerce and social commerce, but it's more about resilience of the supply chain. I think that's the biggest part. It was for a long time just in time. It will be different now that people have to build. To guarantee the supply, because everyone is not happy if you are sitting there in the supermarket and the shelves are empty. Or medicine.
I'll just add to that. I think, in answer to your question, from an investor perspective, the clients we talk to are quite diverse. And one of the themes that we've seen is the focus on growth in urban locations. And it doesn't necessarily mean small facilities. It means just access to high populated, densely populated areas where typically the customer or the businesses, they are impatient. They want their product here and now. They want that 15-minute delivery from Amazon and so on. I think that area of growth with a tight land supply, not access to good land to again develop it, is going to be an area of growth, and that will put pressure on rent. So from my perspective, I think that will continue, and it will be a theme around those areas.
Maybe just one clarification, because when you talk about defense, everyone thinks about the tanks or the big warships. So there will be a different thing in the future. So I guess light industrial will have a renaissance. There's the easy manufacturing, maybe drones. So we have seen on Sunday that suddenly a truck can become an aircraft carrier. So there will be a different way of things, how it will be done with smaller parts, and that means there's a lot of demand. Also dual use, that's also something people underestimate. You need uniforms, you need the supply, you need the backpacks, the boots. So that's definitely driving something. So you should not always think about the munition or tanks or the aircraft. So there will be a lot of industrial production for drones,
components,
for example.
And how much of a driver is nearshoring, friendshoring? That's been talked about, from Brexit and before, and into COVID and into various other ones, and the political instability. How much of a driver do you think that will be? And is it already being seen in terms of your thoughts? I don't know what your view is on that, Max, and we can
So we see the effects of reshoring and friendshoring in our portfolio, but the effect of the slow economic growth at the moment is taking up that. So we have consolidation of networks from our tenants that take maybe parts of their supply chain and centralize it a bit more and closer to their key markets. And we see it as a future trend to be looked at, because the current geopolitical situation asks for more friendly shoring, for new nearshoring, and also for a rerouting of main trade routes. So maybe the very strong orientation to the Western, to the United States will change a bit more, and we'll have to look at a more European centralized trade network.
Okay, good. And in terms of the demand side, Kilian and Pascal, if we look at demand from the occupier perspective, are you seeing particular patterns developing, whether that's specific types of clients becoming more visible, becoming more of a client for you? What's the situation there?
So I think the demand will come from the defense sector in the future, because worldwide governments are spending more money within the defense sector, and also companies producing weapons will probably ask for more warehouse space, not only in Germany, also worldwide. So I think that's a sector who's picking up quite a lot. On the other hand, I think more Chinese or Asian companies are coming to Germany looking for more space. We see space demand, especially in the Düsseldorf area at the moment, coming from Chinese companies. So I think we see more demand from these two sectors, so Asian companies and the defense sector. And perhaps something else, I think resilience of supply chains, that's key. And a customer told me a few weeks ago, my client asked me to produce also in Germany to have a higher resilience within the supply chain. So he has two locations where he produces, in Turkey and in Germany, so to increase the resilience of the supply chain.
Okay, good. Pascal, what's your take on that?
We also see, and in that way, we have demand for logistics space coming up from different sectors. We see a lot of Chinese companies, also as mentioned, or Asian companies looking for space, especially in also North Rhine-Westphalia, and additionally also from the e-commerce sector. We see once again that more space is required, and on top of that, the onshoring or nearshoring is coming into place, and all that is driving the demand for new space.
Okay, good. Let's pick up a little bit on challenges, I suppose, and anyone can pick this up, but what are we seeing in terms of challenges for, I guess, delivering the kind of real estate that people are looking for, whether that's sustainable real estate in terms of net zero, those kinds of elements, but is it land constraint? Is it, as Raimund mentioned, the competition between other areas for that land? What are the challenges that everyone's seeing?
We're seeing quite some challenges with regulation. On the one hand, compliance regulation from financial compliance, which is just building up hurdles to invest in these assets, and on the other hand, or figuring your way out in this network of different ESG labels, ESG demands that are also changing from time to time. EU taxonomy is changing and being developed, and keeping up to date on that, and being able to source future-proof real estate in that environment is quite a challenge.
Okay, good. So regulation, those elements. And in terms of things like energy, power, is that also a challenge in terms of the locations when you're looking at those things?
Yes, definitely. So not at every location enough power is available. So I mean, for data center, that's clear. There must be quite high energy supply or power supply. And that's not the case at every location. So that's important to analyze this. Yeah.
not only for the data centers, we need lots of energy for the more and more automized real estate or the logistics processes inside the assets. We need quite a big power supply. On the other hand, I can see that as kind of an opportunity, this topic of power supply, because if we have a portfolio of long-led assets, and now we have time to develop power supply, we can talk to the government and to the authorities to build the power supply that we need in the next 5-10 years, and then that can work along with the length of our lease contracts.
Okay, good. Let's pick up a little bit on sustainability, because that's been one of the key topics, but certainly in the investment market side of it, where we've been talking to people and at the various sessions that I've been chairing, you've seen that in terms of the positioning being dropped down a little bit, and also people being concerned because of what's happening in the US and how will that be viewed. But Raimund, let's start with the occupier side. So how much of a driver is that? We've seen obviously DHL not wanting anything that is, no gas, so how much of an important part is that? And then I'd be interested to pick up on how much of a match is that with what the investors are looking at. So let's start with you, Raimund, on that.
If I may allow it, so there's maybe also a kind of a personal statement, what I always like to do at this point. ESG is something, sometimes I don't get it, why we are talking so much about it. It's not so easy to implement. It's not so difficult to implement. And I think, I always imagine myself in 10 or 15 years, if I have to go to a conference of, maybe 2,000 youngsters, maybe in the 30s, and they ask you, what have you done in the time? And I said, I have not done anything because US has not done anything. So, and we face the shit. Sorry if I for my words, but I think it should just happen. So it's not a question whether it is today. It's not on vogue anymore. So I think at a certain point it has to happen. And you see it also that what I said before, that e-commerce companies or companies with direct customers, they have it really on top of their agenda, because that they know that their customers are looking for it. So they will actually judge them whether they do something for ESG or whether the fulfillment center is a circular one or a wooden structure. It doesn't even mean that wooden is always the best one, timber. So for them it's very important, but of course for some others which are very cost sensitive, what I said before, they are not looking so much into it.
Okay, good. And we have a journal called Impact that looks at these elements. But Ed, it would be interesting to pick up from you. We're increasingly seeing drives for almost self-sufficiency in some ways, if it's possible, in terms of energy. And I completely buy into what's been said about, the growing amount of energy that will be required as we get electrification of vehicles and those elements. But I guess, what are you seeing from the occupier demand side, and also what are you seeing in terms of the developers and the investment managers delivering on that side?
Yeah, I think ESGs, as in Raimund's, is a term that's been used throwing out there, but actually most people actually refer to the E and the ESG only. But we could come on those two things in a minute. I think it's always been there. It should be there. What I would say is we have seen in some circles where the E and the ESG has taken a slight back seat because of the case of businesses saying, we've got to survive here. We had average tariffs of 10% before Trump, and now the average tariff is 22%. So you go to an occupier and say, hang on a minute, it's now double the cost to trade in the US, and how are you going to deal with that when your component parts are being imported in here? It's a challenge, or going by the other way. So I think some of the businesses have said, actually, there's a challenge here. I think the one thing I would say is, for example, we look at the base spec for developers, and the developers in the room, solar panels and roofs has now become much more standard. So many developers are now putting in a 25 or 30% of the roof capacity, 50% of solar photovoltaic on the roofs. That is a trend that's increasing. And one of the things I am seeing, and we are proudly supporting it, is a partnership with Verisol, which is actually looking at trying to develop a self-sustaining on-site energy generation from a solar panel, where landlords can effectively invest in these solar panels, but actually give that back to the occupier and include it in the rent. And so it's all included energy solution with obviously occupying the building, but actually it's taking energy at a reduced cost compared to the grid, and it's obviously green 'cause it's coming from their building. So there is just, people are exploring different things in that area, in that model, and it's going to evolve as we go forward, particularly as things like photovoltaic becomes much more and more efficient. And things like EV charging, HGV charging, all those things are going to start having an increased influence. And that's good that landlords are now being much more open to that.
I think that's a very good point, and I think it's you have to change the conversation a little bit also to the service charge cost. So we have done it in Zalando, putting heat pumps in and also solar panels. Then on the other side, you have lower costs in the total cost, but usually you talk about the rent, but you have to tell the tenant actually or the user you're saving money on the other hand. And also you have actually energy for EV vehicles. And as said before, it is definitely one of the biggest constraints to get the power on site. So it's not everywhere that you have actually the power you need for the automation. No.
It'd be good to pick that up from the investor side as well. Is that demand really coming from the occupier side? And I suppose, how are you meeting that as well?
Now, the demand is not only coming from the client side, also from the bank side. So to get financing, ESG is key, or for getting financing, ESG is key, but also institutional investors ask for that. So they ask for buildings with heat pumps, for example. They don't want heating with gas, and there are a few investors around who even don't want to acquire buildings older than 5 years, because within these buildings you don't have electric heat pumps. And so for investors, financing banks, ESG is still an important topic. And I think we won't have the change we see currently in the US.
I would even add to this point that it's really important for the municipalities, for example, who own the land and sell you more or less the land where you construct the building, that the building that you're about to build has the newest ESG requirements.
Okay, so that really is key.
That is key, and I think it's for all stakeholders at the moment, and really important aspect. Yeah.
For us as a strategic investor with a hold period that is far beyond 10 years usually, there's not an option to choose ESG. Looking at energy consumptions, you talked about the price of the net rent being able to be higher when the service charges are lower. On the other hand, we're looking at, and we talked about the labor market. If we don't incorporate social aspects in our assets, we won't be able to attract the workforce if our assets aren't relating to that. And the governance, on the other hand, is extremely important too. If there's no acceptance of logistics in the general population and the smaller town halls, we won't be able to develop and increase or have more logistics assets in Germany.
Great. I'm going to just drill down a little bit because it may be interesting for people in terms of looking at the relationship, I suppose, between the demand and supply, what that may mean for you, whether you're an investor and looking at this from an investor perspective, or you're also looking at it from a logistics company perspective, and so therefore you'll be the ones paying the rent, what the situation is. So we're more familiar with talking about it from a capital markets side, but what are we seeing about those dynamics in the market? So I suppose, where do we see the potential for rental growth from an investment side? And what does that mean in terms of what people may be expecting if you're an occupier, for example? Let's start with you, Ed, just in terms of where you're seeing the capital market side, and then I'm interested to get everybody else's view.
Yeah, I think across the whole of Europe, I'd say stepping back from it, we're seeing a reduction of rental growth. I think it would be remiss to say it's continued during COVID in the same way as it has done. That the good thing is we're seeing rental growth outpacing inflation. And so from an asset class point of view, it is typically gone higher. That's why occupiers are very keen to put caps in their leases, because we've seen that growth in the market around the area. So, for example, the driver behind that is obviously the vacancy rate. The vacancy rate across Europe, the European average is about 5.2%. The 10 to 5-year average between 3.8 and 4.1%. So actually, we only are a little bit above that. If you go into other asset classes, it's a much higher vacancy rate. And obviously, there's a certain level where it's much more, so we say tenant favourable or neutral, but it's generally speaking in a positive direction, but steady. It's not getting aggressive, with the exception, and this is one of the things we've seen, in pocket locations. It really pays to know your locations and your size bands. So for example, in Barcelona, we saw sort of 12.5% rental growth last year. In Munich, in the city urban logistics, we've seen 37% rental growth. In other parts of Central Eastern Europe, it's been a lot less, sometimes something negative. There's a bit more land. But generally speaking, if you cross the average, it's been positive but not too strong. And the areas, I think, where, to answer the question about where do I think growth is going to come, I think you're going to see it back in those heavily infrastructure locations, those key conurbations, those prime locations, and also in really densely populated urban locations where there is simply the need to be close to the customer to deliver on the promises and to be there as effective as possible. The cost of rent out of the total occupational costs is typically a much smaller proportion, depending on who you talk to, whether you're talking to Amazon, DHL, broadly between 5 and 30% of the total occupational cost is a bandwidth. So if you then stack up the cost to an occupier, it is obviously a lot less. But I think if you look at your markets, know your markets, and think about the size bands relevant to the location, you're going to be picking a winner.
Okay, good. Does anyone else have a take on that?
I think at the moment we see upside potential again in the market for investors. So when we look at the market 3 to 4 years ago, pricing was so high, so we had cap rates around 3%, and I always asked myself, where's the upside potential? And today, we see cap rates around 5%, so upside potential is back again, and interest rates came down, so I think more and more investors are picking up and doing investments.
So maybe if you won't be surprised if I say I don't like rental growth and I don't like the discussions. I wonder sometimes, have you ever heard in a room, you know, in the car trade fair or something, that the manufacturers of cars are sitting there, what do you think about increasing prices of cars? You know, there's not this kind of discussion. So there will be an increase because it's a function of costs, so it's just getting more expensive. But why should there be in real estate that you talk about rental growth if there is a function of costs? Because land is more expensive, construction costs is more expensive, then of course there's rental growth, everyone understands it, but it should be a fair bit. So having a discussion about, could we maybe increase the rent a little bit? I know you're not talking about it. It's a bit, and sometimes for me it's in the system, because it's the value chain. You know, there's the land developer, then it's the other developer, and everyone taking a big share, and at the end actually someone like Union Investment is buying it, and they are actually with a very low core yield, and of course then they have to look at a certain point that they get actually a reasonable yield, they have to increase it. So it's part of the system. So in general I think you have to be careful. You cannot always say, okay, it's just 10% of the total unit costs. Rent, it's still a cost, you know, and logistics is a low margin business, so be careful with how you structure your prices.
But I'm guessing that if everybody is chasing specific hot locations and there's limited land, then ultimately there is going to be an increase because of supply and demand, in a way.
Absolutely. I mean, that is also what we are currently still seeing in the hot markets in Germany. For example, the Frankfurt area has also just seen, once again, a prime rent increase, and the demand is high for space, but there's just no land available for development, or no vacancies, and that will automatically lead also to higher rents in that area. And but we have to be more precise and more careful about the locations that you're going in.
Okay, good. Now there's 10 minutes left. So if anybody has got a question, now is a really super time to put your hand up, stand up, or shout it out, and I will come to you. And I'm going to start scanning the room, and I'm going to start over here, and it's going to take me until I get to the end of this sentence. And if you haven't put your hand up, then I've got, 2 hands, and I'm just looking for we have a fabulous person walking down. So there was one here and one here. Let's start with the lady there. Yeah, great.
So hello, my name is Paulina, I come from Poland. Professionally, I come from DHL supply chain, so contract logistics. We are different people from different branches and countries, yeah? My question is quite private. If you had some like $100 million now to invest, where would you invest into warehousing? Which country, which city? Thank you in advance.
Great. Let's do the other question as well at the same time, and then we can because that might be 500 million. Who knows?
500 million question. Yeah, my name is Dirk König-Ohnsorg at Renus Logistics. I have a background from real estate investments, and there are rumors that there may be a tendency towards price chips in the current real estate investment transaction market in logistics. So this is maybe a question to you, Ed, or, well, we have 3 investors. If you can confirm and build on that.
Great. Any others while we're doing that? Oh, one here. Sorry, there's one right at the front as well. Ainut, yeah.
Hi, my name is Ionut Sopra. I'm from Romania. You mentioned power supply as a strategic future element of development, investment and everything. I was wondering if there are transparent data from governments, from ministers of energies, and how do you get the data, the insights from countries? Which one will be more in focus due to the power advantage, and how do they regulate better the power supplies in the countries in order to future develop? So the power in the countries.
Okay, great. So let's do those in order of energy. Does anybody want to pick up the energy part of it?
I can just talk for Germany, and there's the Bundesnetzbehörde, and they have data for all that, and you can find out what supplies, and you can ask them to increase the power supply, but it takes quite a few years. So that was what I was talking about before. If you have a leased asset that is maybe not doesn't fit your portfolio anymore and needs refurbishment, you can work onto seeing a higher power supply in maybe 5 or 10 years, and then you can redevelop maybe for a data center, or on the other hand, a highly automated logistics asset.
If I may add, I think it's a challenge for everyone in Europe, because Europe is the only continent. Actually, the second, China, is also not sustained because they have everything, but they have no gas and no oil. But they have Russia now in the backyard. That's probably the reason for the big friendship, that they are getting the oil. US they can actually survive without anything. Europe has nothing. There's no resources. The only thing is actually natural resources, and that's why you have to build in renewable energy. And of course, it's an effort for Europe how to do this network, and everyone has to work together. And maybe in the moment it's better in more advanced countries that the power supply is more stable. But on the other side, in other countries like Romania, you have still the opportunity to build something new. And starting from the scratch is sometimes better. And maybe also to your question, to the 500 million question.
You've got to wait for that.
Okay.
We're going to come. Don't go now, Raimund. Don't go now. That's the final one. We've got to wait for that one. On that, I've fed in a little bit as well to the UK 2035 power strategy and business strategy. Yeah. And there was a very big focus on that, because one of the issues in terms of foreign direct investment, particularly into data centers, but also logistics hubs, those kinds of elements, is how long it takes to get somebody onto the grid. So therefore, if you can provide that power from somewhere else, so there's a very large data center being built in the northeast of the UK, which is actually getting its power from Norway.
Yeah,
under the sea, for example. Yeah. So it's a very big focus for people. Price chipping, maybe useful just to tell people who may not know what price chipping is, and we'll quickly deal with that.
I can't comment on any particular processes, Dirk, but I will give you a flavour. But price chipping, for those who don't know, is very simply having agreed a price at the outset before doing your LOI. When it comes to actually signing exclusivity and then obviously completing, is deciding to reduce the price to whatever you fancy. That's the very simple terms.
I promised Ed a half a litre of beer for being on the panel, and now I've cut it to a quarter of a litre. That's price chipping.
That's a joke, yeah. That's it. And the question is, I remember that for next time. So I think in terms of processes in the market, it's case by case. I mean, I think it's fair to say to put a blanket, we're seeing chipping around Europe, I don't think it's the case. I think you have to look at why there's been chipping. I think we've had, the Trump tariff thing had a real effect in the market. I mean, USP Capital, for example, the week after that happened, unfortunately I was involved in one or two of those things. They either walked away or they did a significant reduction because they weren't sure what the exit yields are going to be and what that underwriting should look like. moving forward in the cash flow, and that's been obviously an example. So you've got to look at certain events about certain things. There are obviously some things when you are seeing specific things where there's certain risks that are unquantifiable, where people aren't sure. Most of the case, I don't think we've seen huge chipping everywhere, if I'm being honest. I think you're seeing people saying, we're either going to do it and pull out, or we're going to do it as we said like we would do it. That's generally the feeling, unless there are specific things and indemnity issues in the SPV structures.
I'm not going to ask you gentlemen to comment on that because we will run out of time if we do. So let's focus on the question about if we'd got 100 million or however large a sum we would like to invest, where would we do it? Where are the key locations where we think there's the best opportunity at the moment? Do you want to start, Kilian? Yeah, go.
Yes, I would prefer to invest in Germany because it's quite hard to get building permits in Germany. In Poland, it's easier to get building permits, so we see more developments in Poland than in Germany. If you have an asset in Munich, Frankfurt, Stuttgart area, the value is quite stable. So that's the reason why I prefer to invest in a good location in Germany. I wouldn't just invest in one location. So you said $100 million or euros. So I would diversify a bit, but I think investing in an infrastructure or in a location with a good infrastructure in Germany is a good investment.
Great, Pascal.
Yes, so I would also split it more or less across more locations. I think the Dutch market is really interesting. You also have almost no land available, so I would definitely go to the Rotterdam market. This is all goods are coming in through Rotterdam. I would also go to the Rhine-Main area. Also here there's almost no land available and you have large demand for logistics space. And also, for example, the Munich or Stuttgart area. You have a good customer basis and also almost no availability, no vacancies. So for me, those would be the markets.
Okay, great. Max?
Well, there are some overheated markets. As you said, rental growth in Munich and Frankfurt and so on is quite high. But we also see the opposite of that. There are markets that have a bad name for now, and nobody wants to invest there. And as a strategic investor, I think these markets are especially interesting. For instance, Bremen right now. Nobody wants to buy in Bremen because Bremen has some difficulties with the automotive, too much automotive. They had a huge development pipeline, so they had to were struggling with some vacancies. But I think that is a market with high potential because, as we said before, in the future, ports and airports are going to be extremely important. And Bremen is a perfect location for that, to have a very strong underlying long-term strong logistics market. On the other hand, maybe Leipzig is a similar example. Everybody constructed logistics in Leipzig, and the Leipzig market was getting bigger and bigger, and all of a sudden Halle was Leipzig too, and it's getting bigger and bigger. But the original Leipzig market with the airport has a very, very strong underlying logistics need and availability due to the airport. So that would be a market I'd be interested in.
Okay, great.
I'm going to avoid Germany because we've had a lot of Germany, so I'm going to be opening it up a bit broader. In terms of geographical locations, I would think about, for example, Ile-de-France in Paris. I think that's got a lot of growth. You know, to give you an idea, Ile-de-France is bigger than Greater London. It's an enormous population. It has a huge demand. They've got regulation coming in about cold storage vehicles, polluting vehicles coming in. So food, for example, getting into the city is quite difficult. Barcelona is interesting. I also think Milan, for example, is quite interesting for the reasons that if you look at Milan compared to Barcelona, you know, the yields in Milan are typically been 5.5% for some time. In Barcelona, they're sub 5%, 4.6% net initial adjusted. And the dynamics in terms of rental growth, vacancy rate are very similar. So for me, I think there's going to be compression in yields in Milan. It's one of the, I think it's the fifth wealthiest catchment area if you include sort of southern France, northern Italy, obviously Germany. It's very wealthy, and so that generates sales, it generates economic activity. So I think that's going to be interesting. In terms of sectors, we haven't talked about subsectors within logistics, which has perhaps been missed. I would encourage investors to think about obviously having a balanced portfolio, looking at the traditional, you know, vanilla, grade A, top quality specifications because there's liquidity and there's obviously a lot of demand for that. But also don't be afraid to not follow the herd. You know, how many times have we seen in the markets where, for example, you've seen, you know, many years ago, logistics was not favoured. And if you look at industrial open storage, you can get yields of 6, 7.5% for 25-year leases to decent covenants, and the rents double from £1 or €1 a square metre to €2 a square metre. That's 50% rental growth. And for me, I just feel that feels undervalued. And if you look at the replacement costs, the capital values per square metre, it looks attractive. The reason it hasn't done that yet, it's not necessarily been fully recognised as an institutional asset class. So I would say be brave and go into other areas as well as doing the vanilla stuff.
Okay, great. 1 minute to you.
Sorry.
So it's what was interesting. First of all, it depends what you're interested in, whether you're investing opportunistic or a core plus or a core. So probably till Sunday I would have said Poland. So definitely there was a reason why the Economist had a cover sheet on Poland. In the moment, maybe I would still consider it, even if I don't like it, and not because I don't care what kind of president or what they're doing, whether they like Germany or not, but I don't like this national trend. You know, it will not help us. Europe will be lost if we play the national cards, so that's not helping. Yeah. So we have to work as Europe, otherwise we have no chance in the global competition, and that's why I'm not so sure anymore. But still a good bet. And then, of course, Germany, I would not go in overheated markets because you pay a price for it. So then if I get a good bargain, so if anyone has, so I have the 100 million with me, if somebody has a good deal, so we can sign it. No, and then in France, I would probably rather go to Lille, what I said before, so maybe the secondary locations which become more prime locations in the future. Yeah.
Great, thank you. For those interested in tracking it more, there's copies of Real Asset Insight at the front. Very pleased to be a media partner here, one of very few actually, interestingly. So do follow that and connect with me on LinkedIn. And if you don't already follow us, then that'll lead you to where we'll post the presentation, for example, so that those who missed that don't miss it and you can see it. Otherwise, thank you very much for joining us. I will actually be traveling tonight to Warsaw in order to chair the CE summit there. So that will be interesting. I'll take some of that perspective from here. And again, we've got a big focus on supply chain and logistics there as well. So do check that out because I'll feed that back in over the next couple of days, what's happening here. So I'm sorry to be leaving you here in Munich, but thanks to everybody for attending and thank you to all of our speakers. Thanks very much, everybody.